Kate, you want me to do it?
Okay, so we have
Oh,
started recording.
okay.
All right, so,
Good.
so I am Katie Keevan. I am the branch manager of the Cliff Cave branch, and I thank you for joining us all for a presentation by Leroyce Gaines on record keeping for small businesses. The Urban League of Metropolitan St. Louis Women's Business Center is dedicated to empowering small business owners by connecting them to tools, resources, and partners that foster growth and sustainability. Through one-on-one coaching, workshops, and training, the WBC provides opportunities for learning, growth, and success at every stage of entrepreneurship. Today's presenter, Leroyce Gaines, is the owner of Let's Talk Business, where she provides consulting and guidance to entrepreneurs and small business owners. With more than a decade of experience as an auditor, accountant, and educator, she has taught and mentored in accounting, entrepreneurship, and business management. A proud St. Louis native, Leroyce holds multiple advanced degrees, including a dual MBA in business management and chain supply chain management, not chainsaw. Beyond her professional expertise, she is deeply committed to mentorship and service, helping young girls and entrepreneurs build strong financial practices and sustainable business. Welcome, Leroyce.
Thank you. Thank you for having me. I am really excited about today. This is what I do best. This is what I love to do. I want to just take a few minutes. She's done a great job of introducing me. Thank you for that. I also want to acknowledge the Urban League and the Women's Business Center. They have a phenomenal program and a phenomenal set of resources. So please, whenever you have chance, always check with them. You would be amazed at what you can get from them. So, with no further ado, I'm going to go ahead and get started. The one thing that we're here for is naturally record keeping, right? And so we want to talk about why record keeping matters. Okay. So, record keeping is something that helps you make what I say is sound decisions. When you know better, you do better. And knowledge is growth. There are a lot of things that you have to take into consideration when you start a business. But one of the most important things that will make life easy for you is the record keeping process. And by that, I mean starting it from the very beginning. Even if you're not sure what you're doing, you keep anything that you think might possibly remotely be important, right? And you keep it. And whenever you get around to meeting with your accountant or your tax preparer, or even just a business consultant, they can kind of start to go through what you have and see what else you need or what else they need from you. So, record keeping is basically it's a process in which you collect data, you organize the data, and you maintain the data for a set period of time. I am a big proponent of cloud storage. I know a lot of people are afraid of the internet and afraid of storing things in the cloud. But the one thing that you don't have to worry about with cloud storage is if your computer gets stolen, if it crashes. And trust me, I've had several computers and tablets crash on me. But my saving grace was the fact that I had them stored in a backup system. I either had them in the cloud or I had them on an external hard drive. Initially, I just had everything on this external hard drive, right? That was like, I kept it, like, I guarded it with my life. It was the most important thing, right? How about it crashed? So I lost a lot of things. And I share that with you for those of you that may be against storing your data in the cloud. The key to it being safe is making sure that you have a good password. I don't mean like, your high school mascot and the year you graduated. That's not a good password. Like a password that has numbers and letters and capitals and symbols, and you keep it to you. You don't share it with anyone. Another thing with record keeping and why it matters is that it helps you have financial clarity. I always say if someone calls you and say, "Hey, I just moved to the new house. I want you to come over Friday at 6," right? You don't know what the house is. You don't know how to get there, right? So you need something to help you figure out how to get there. Well, that's kind of what having good records does, because it gives you financial clarity, right? So you're able to look at those records and make sound decisions. And by sound decisions, I mean thinking things through before you do it. For example, you might say in your head, "Oh, we should hire some people to come and work on the weekends," right? I can afford to pay $15 an hour. They work 10 hours over Saturday and Sunday. That's only $150, right? That's what you think. But you don't really consider the fact that there are other fees associated with that, the taxes, the FUTA, the SUTA. There are so many other things that are associated with that. So it's not really just $150, because you have to match what you take out of their check for Social Security, what you take out of their check for their taxes. There are different things that you have to match. So it's important that you have these records and you use your financial records, your financial reports to make your decisions. Um, and another thing is the proper record keeping. It not only helps you in being able to make decisions, but it also opens the door for you to get funding, right? Oftentimes, people have a business, either their business is going and they have an opportunity to grow, but they need to get some money. Maybe a big contract comes and they just need to go get a loan. Well, whether you're going to a bank or one of these organizations that lends money to businesses for the purpose of business growth, the one thing that you're going to have is financial records. Like, they're going to need to see your records. They want to see when we say your financial records, the three biggest ones are your income statement, your balance sheet, and statement of owner's equity. But they may ask to see other things. For example, let's say you have um, 5 rental properties and you've just acquired another property, but you need to do some work on it. Now you have money coming in. All 5 of your other rental properties are rented. Let's just say $2,000 a month. Well, when you go to someone else for money, yes, they see your financial records, but they're going to want to make sure that you actually have people in there that you're consistent with the income. So they're going to want to see your rent roll. Well, if you are just collecting the rent, paying your mortgages and sticking the money in your personal account or doing whatever, but you're not tracking it, you're not tracking when you receive rent, when they're late, they're more than likely they're not going to give you the loan. So sometimes it's things that we think are simple or no big deal, and they end up being a really big deal. And so I kind of try to highlight the most important things, which is the compliance with laws and regulations, the financial clarity, securing funding, whether it's a business loan or a grant. Even when you apply for grants, in some instances, they want to see financial records. They want to know that when they give you this money, it's not going to go to waste. Like, you're actually going to be responsible with it. And one of my biggest ones is when you have good record keeping, one of the things that you have to have is internal controls. And internal controls protect you and your business. And we'll dig more into internal controls a little bit later. But those are the key things. Let's see, we can't raise our hand because it's all virtual. So one of the things that I want you to think about is whether or not you feel comfortable with the current record keeping that you have right now today on October 10th. The record keeping that you're using for your business, how comfortable are you with what you're doing for your business? And Katie, will you be able to keep an eye on the chat in case someone has a question on the particular site that I'm on?
Yeah, Addie's keeping an eye, and if she sees something, she'll let us know.
Awesome. Thank you so much for that.
Of course.
Okay. So are there any questions just on the basics of record keeping? I'm going to go into more clarity on all of the, excuse me, main topics, but I just want to know if there are any questions top of mind right now that I can answer or that I can keep in mind as we go through this.
So far, we do not have any questions.
Okay, great deal. Okay. So, internal controls. I made an adjustment to it and it didn't come up. Give me just a second because I want to tell you what the definition of internal controls is. I know what they are, but I want to really explain it in a way that just a definition. So internal controls are accounting policies and procedures that protect your assets, they ensure accuracy and reliability of financial reporting. And more than anything, they promote operating efficiency and help prevent fraud. And I stay on fraud and errors. But the reason that I really want to touch on this fraud is because during these years that I have been an auditor and that I've helped people prepare for audits, you would be amazed at some of the small things that, when left unchecked, they grow into big things and cause you problems further down the road. So internal controls are really, really important. And when we talk about internal controls, we're talking about something like segregation of duties. What does that mean, Royce? Well, segregation of duties basically means if, let's say, you run a boutique, okay? And you have a boutique, you have 2 or 3 people working. You might just have 2 people working. Well, the person that's collecting the money every day, and then the next day they're comparing the money to the money collected, like they're comparing it to the receipts, that probably shouldn't be the same person, right? The person making the bank deposit probably shouldn't be the same person that verified the money. So you kind of have to separate those. And it's not saying, oh, that you can't trust people or even that you don't trust them, but you're protecting yourself. And I've seen instances where companies may have one person, and like I had one client, they didn't really particularly care to deal with the money. They just wanted to work in the business. So they gave all of that control to one person. Unfortunately, that one person abused the power and the trust of the business owner. And so, because that person was getting the money from the front office, counting how much, they had, that exact same person was responsible for entering information into the computer. That same person was responsible for making the bank deposits. That same person was responsible for paying all the bills. So one person handled all of the financial responsibility. Well, later on, when I went in to do my forensic accounting, it was later discovered that that person had been making cash withdrawals from the bank account because they had that ability to. That person had been paying personal bills. Why? Because there were no checks and balances. So internal controls provide those checks and balances that are necessary to help your business not only grow, but be safe and be financially secure. Something else that you want to do is perform regular bank reconciliations. Okay. And that's nobody's favorite. Trust me, I'm an accountant and I don't even like doing bank recs. But it's really, really important for the health of your business. You may look and realize, you may think everything has come in your head. Oh, all the bills have come in. You just think because you look at the balance, everything is cleared. And then maybe later on down the line, it's time for you to pay bills or do something important and you need the money. And then today or yesterday you had $8,000 in the bank. And then when you open your account today so that you can make that transaction, you see you only have $300 in the bank. Well, that's because you had other checks that were in transit and the people just didn't cash them right away. It depends on the bank policies that you bank with. But most checks are only good for 90 days. I have seen some that were good for 120 days. I've seen some that are good even for 180 days. So that's something to pay attention to. And that helps when you are doing your bank reconciliations regularly. You're able to see that. Now, depending on the software that you use, you may be able to set up a bank fee, which will make the regular bank reconciliations a whole lot easier for you. And we'll talk more about that in a few other slides. Another one is your secure access to financial data. Remember, I talked about saving things on the cloud. Just about every bank now offers online banking. They give you the ability to control your banking, whether you're paying bills, transferring money, all of that is available at the fingertips, right? But you need to be careful at who has access to that information. If it's just you may want to have someone else, but again, whoever has access needs to have their own login. When I say give someone else access, I am never ever telling you to share your login with anybody for any reason. And you may think that's not that big of a deal, but if a mistake is made, we're not going to even say fraud, just a simple mistake is made, right? If you have been giving your passcode out to 2 or 3 other people within the organization, it's kind of hard to track who made the mistake, right? Because there's an audit trail. Anytime you log into your bank account, there's an audit trail. So it's going to tell you whether you logged in, whether your accountant logged in, whether your book, the accounts receivable clerk, whoever it is that had access, it will be able to tell you who logged in and what they did when they logged in. And so that's really, really important to keep track of. Um, excuse me. Something else that's a part of internal controls is the approval process for spending. You may have worked somewhere before and you've seen where they had a procurement department. Procurement is purchasing. And there should always be a specific policy or process in place for procurement, for spending. I mean, naturally, if you're buying, if you're grabbing a 2 liter for the office for lunch, that's not that big of a deal. That can just come out of petty cash. But when I say approval process for spending, you need to set an amount. Maybe if you or your business partner or you or the procurement person, anybody that spends over a certain amount of money, it needs to be approved by more than one person. And you'll find a lot of times when you open a bank account as a business, purchases over a certain dollar amount has to have 2 signatures. And that's part of that internal controls, making sure that more than one person is aware of the purchase and that the purchase has been approved. Something else is documentation and audit trail. And by documentation, I mean any contracts that you may sign, any contracts that you may provide, any agreements that you may make with someone. You always want to keep those. And again, like I said, I'm a big fan of the cloud. It takes 2 minutes to scan a document and save it to the cloud. Whenever you get around to the actual journal entry, the accounting steps to record that transaction, you can attach that documentation. So I always encourage my clients, anytime there's a purchase over $50, when you are making your journal entries, attach that receipt. It will make things so much easier later on down the line. Are there any questions about internal controls? No? Okay.
No, we do not have any questions.
Okay. All right. So then, I'm going the wrong way. Sorry. Okay. So tracking income and expenses effectively. This is probably like my favorite part, right? It's so important. Like I just said, set a dollar amount. If it's over $50, if it's over $100, whatever that amount is, you set it. There are softwares that you can use that are really user friendly and actually very cost effective. So we have QuickBooks and we have Xero. Xero used to be free, but it's not anymore. It's not that expensive. You can pay for it by the month or you can pay for it annually. I think by the month, Xero is either $20 or $30. And then you can pay for it annually. QuickBooks, they're always running a special. I looked today before this started, and the current QuickBooks special is 3 months at 50% off. So QuickBooks, if you're just a single person, a single entrepreneur, sole proprietor, and you don't have a lot of transactions or you don't have a lot of moving parts to your business, then you can use the books. I forget which one it's called, but it's the very last one. I think it's like I can't think of the name of it now. But there's one. Let me see what it is really, really quickly. It's escaping me. Solopreneur, that's what it is. So there's one that's called QuickBooks Solopreneur, just like entrepreneur. And it starts off at 7 days, $7 a month. But there's also a 30-day free trial. So, and basically you can get, 6 months for $35. That's a really good deal. That gives you time, and they have a wizard that will help you with the setup process. So I always suggest go through, do the wizard, and then reach out to a bookkeeper or an accountant and just see if they will review for you what you have set up in your charter accounts and the processes that you have set up in QuickBooks, or if you have questions. But the wizard is usually pretty, it kind of grabs everything. It's usually very inclusive. But using this allows you to categorize your expenses correctly. What do I mean by that? When you use QuickBooks, they're also going to, they'll have like the little eye for information that you can click to gather more information. They have a little chat box where you can ask a question if it's a simple question. They're not going to give you specific detailed information, but just overview general questions they're able to answer for you. But this allows you also to track all sources of income. And so let's just say, for example, you have a food truck, okay? So you have a food truck, you list all your income, you list your expenses. Well, because see, you're tracking your income and your expenses effectively. Well, then you start to realize, for some reason, you are spending more on, let's just say, maybe chicken, but you hadn't paid it any attention. But you start to look at your financial statements, because you can do what's called a budget to actual. So you can compare what you spent on things this month compared to what you spent on them 6 months ago or last month. This allows you maybe to see that maybe costs have gone up and you hadn't realized it. Gives you the opportunity to shop around and maybe save more money. The same thing with income. You may look and see your sources of income. So you have the lemonade. You have lemonade, line item for lemonade, line item for water, line item for chicken, maybe line item for fries. And then you start to notice that you're making a lot of money off of a specific type of chicken. Maybe you have hot wings and you have lemon pepper wings. And you start to notice that you're making a lot of money off of your lemon pepper wings. So then that's going to say maybe you need to do additional planning. So I don't want you to think of bookkeeping as a necessary evil. I want you to think of it as a way to just learn more, right? Because your business is your baby. So making sure that you are accounting for your expenses and your income, revenue streams, it gives you the opportunity to really watch it grow and see where maybe you might need to do some correcting, right? You might need to adjust a few things. And that's okay. It's not the end of the world. All that says is that, okay, based on data, maybe we do more business this time. I had one client that had a food truck, and they just love doing this particular event every year, right? Every year. And I was like, I know you like doing it, but maybe you should consider just going, and not having the food truck. He's like, oh no, they love our food. They love our food. And I was like, but do they really? And so when I was able to pull out his financial statements and show him how much money he was actually spending just to be at that event, right? Because he had to pay an interest fee as a vendor, and then he had to give, I want to say like 30 or 40% of his sales to the event organizer. Well, then when you take that out, like you're not really making a lot of money. Like you selling a lot of volume, but when you get through with what you have to put in to be there, as well as what you have to pay them afterwards, because you're giving them money out of the sales, not out of the profit. So their money comes off top. And then he had to, look at his expenses. And so because I insisted on them tracking every expense, every income, everything they did, the uniforms that they bought for the event, the extra power cords they had to buy, the bigger generator, just everything. At the end of the day, we were able to look at 2-3 years straight of them going to this event and realizing that overall the company made money every year, but they really were losing money at that event, right? By the time you broke down them paying a portion of their sales. And so again, had we not been tracking the income and expenses in his head, they had to be making money, right? Because they always had a long line, but those people will remember the name of your company, join a food truck app, do something different. Let's find another way to make up for that revenue that you're not going to get at that event. And actually, for the next 2 years, he's made more money by not going to that particular fair. Okay. So it's just so important to track your income and expenses and to make your decisions based off of that data. Save receipts and invoices digitally. Again, I'm a big fan of the cloud. There is an app, and I'm going to type its name in the chat if I can get to the chat. Maybe I can't get to it. The name of the app is Genius Scan. So it's the word genius, Genius, and then scan, SCAN. Genius Scan allows you to take a picture of your receipt, contract, whatever it is, and it turns it into a PDF document, right? So you have the receipt and something, if you're taking notes, this will help you in the long run. When you have a receipt, because receipts fade, right? So when you have a receipt, it's very important that you circle the date so that you can always draw your mind. You can draw your eyes to the dates, circle the amount, and then write what it's for. Write what it's for then. If you are meeting with a client, if you headed to the post office to mail something, all of that, right? But you write on that receipt what it is. And then you take a picture with Genius Scan and you scan that receipt into a PDF document. When you do your bank feed later on down the line and you're trying to categorize your expenses, you don't have to guess about what it is because you have this receipt and you just attach the receipt to that transaction, to that journal entry. And then the next thing is reviewing your monthly reports. Okay. And again, your monthly reports will be your income statement, which shows your revenues and your expenses and basically your profit or your loss. Sometimes it's called a P&L, okay, for profit and loss. And so what that does is it shows at the end of that period, whether you do it monthly, quarterly, semi-annually, or annually, it's going to show at the end what your net income or your net loss was based on all of your revenue and all of your expenses. A balance sheet shows, it's like a snapshot of your financial position at any specific time. So if you want to know, how much money have we made at this time last year, you can pull your financial statement and do one for January 1st to October 10th of 2024. And it's going to show you at that exact moment where you were. And you can compare that to where you are now. And then there's a statement of owner's equity. So that basically shows how much money you've put into the company, what the liabilities are, how much money you've taken out of the company. Make sure if you are taking money out that you're recording it as owner's draw, right? because you also need to account for that, because what's going to happen is your accountant is going to give you a 1099 at the end of the year for any monies that you've pulled out of the business for personal use. You know, maybe you went, excuse me, maybe you ran to the store to get one thing and you just had your company card and you saw a jacket on sale that you just had to have. And so you used your card. Not recommended, but if you do, you need to make sure that you recorded that as an owner's draw. But while we are here talking about this, I'm actually going to also make sure that I express to you all the importance of keeping your documents separate, right? Keeping your transactions separate, keeping your money separate. I'm going the wrong way. Please forgive me. I went too fast. Oh, and it's moving slow. I've had some technical difficulties today. Okay, so next we're going to talk about, I just talked about those financial statements, right? And here's just a quick synopsis again of what they are. Your balance sheet is a snapshot of your assets, your liability, and your equity. The income statement is a profit and loss statement as well. That shows your revenue, your expenses, and your profit. Then you have your cash flow statement, which shows how your money is moving in and out. And then you have your owner's equity statement, which shows the value of the owner's investment. So how much money the owner has invested in the company. And these are basically what you use to help you make sound financial decisions. Okay. So when you are thinking about what you have to do next for your business, whether or not you want to buy something, whether or not you can afford something, these are the things that you look at to kind of help you make that decision. And so when you think about all of these financial statements and the ones that are here, ask yourself, do you understand what they mean? Right? Do you understand what you do with this information? Is there, and this you can put in the chat, I'll give you all a few seconds. Is there any any of these financial statements that you would like more information on or like to understand a little bit better?
Looks like we have a couple questions. Paula asks, what about donation from business? Where should that go?
A donation, what is the business donating to, Paula? Or are you donating to the business?
She said all of them.
Huh?
Oh,
No,
nonprofit.
oh, so the business is donating to a nonprofit, is that correct?
Yes.
Okay, so the business is donating to a nonprofit. There is a spot where you can put that donation. It depends on what your chart of accounts says. So when you set up QuickBooks or Xero, you're going to have a chart of accounts. And so that chart of accounts is going to say, but it would definitely be on the it would go on the balance sheet. And it would also go like you would when you do your financial statements at the end of the year, you're going to see it on there as well. And it's going to show that donation. It also depends on what you're donating for. So like if you are doing, let's just say marketing, but it's a donation, then you're gonna have a marketing expense, right? So because you for every transaction, there should be two entries. And so what you are going to do is have one for marketing because that's what you did. And then the other one is going to be an expense, but it would be like, let's say, charitable contributions expense. That's where it would go because you are making a donation, but it's still an expense because it's money that you paid out. I hope that answered your question.
The second question is from Kayla. Does QuickBooks generate all these statements or documents?
Absolutely. I am having one of the things that I wanted to share with you all was what it looked like on QuickBooks, but for some reason, my internet is moving extremely slow today. Give me 1 second. I'll try again to pull it up. But when I was trying to pull it up earlier, it just wasn't opening. But because my goal was to share with you all a sample company. Yeah, it's moving extremely slow, and I'm not sure why. My goal was to share with you all um, a sample company in which we could do those transactions. But when I tried to pull it up for whatever reason, it was moving really, really slow. So I don't know if QuickBooks is having some issues. I'm not sure what it is, but it was really slow today. But yes, QuickBooks. So in QuickBooks, when you're in your QuickBooks on the left hand side, the left margin, if you go down, there's going to be a spot that says reports. So if you click on reports, then it's going to say normal reports, standard reports, custom reports, or some other name. So you want standard reports because this is a standard report. And when you pull it up, it's going to show income statement, balance sheet, cash flow statement, owner's equity statement, a trial balance. So a trial balance is each transaction that's entered into a specific account. I'm just going to go in the weeds just a little bit so that you understand what I'm saying and what you're looking for. So when you when you set up QuickBooks, it's going to give you a chart of accounts. So that each account is going to have a number. Each expense account, each liability account, each asset account. They're all going to have a number that's associated with that specific account. So every time you make a journal entry or you do a bank feed and you categorize a transaction and it goes where it's supposed to go, it's going to one of those account numbers. So then at any time, you can request a trial balance for a specific account number. And so then you don't have to go through the weeds to go through all of the transactions to find one specific transaction. You can instead click on maybe all of your transactions for Ameren UE. And it's going to tell you every bill that was paid, the date it was paid, and any other notes or things that you've attached to those transactions. So you get all of those from the reports, which is on the left-hand margin in QuickBooks. Did that answer your question, Kayla? Do you see anything else, Addie? Did that
I
answer her
do.
question?
Let me see. She said, can you add additional charters?
Additional charters, you mean additional businesses to QuickBooks?
I'm sorry, that was from Kayla. Paula said, can you add additional charters?
Please elaborate. I want to make sure that I answer your question correctly.
Okay, so Paula said transactions that you have now, you did not have in the beginning.
Yes, you can add those. So when you set up a QuickBooks, I actually I'm also a real estate agent, and so I actually went into QuickBooks in August and set up QuickBooks for Roy City Realtor, right, as an account. And so what I was able to do was go back and put all of my expenses, my training that I had to pay to become a real estate agent, the test that I had to take to become a real estate agent, that fee, my business cards, my license fees, my fingerprint. I was able to go back and put all of those expenses into QuickBooks starting back at the beginning. When you set it up, it's going to ask you what date are you starting your business from. And so when you pick what date you're starting the business from, it's going to. I'm good. Okay. Okay, so what you have to do, sorry about that. What you, excuse me, have to do is set up what your start date is for your business. And then as you continue, you're going to just put in all of the transactions that you have. If you had a bank account at the beginning, at the start of your business, if you had your business bank account then, when you set up your bank feed, it's going to ask you how far back do you want it to go. So if you have it go all the way back to February 10th or whenever you started the business, then QuickBooks is going to import all of those transactions, every last one of them. And then something that you can do to make it easy for you, and I think that might even be the next slide. It is. One of the things that you can do that will make that easy for you is setting up a rule. So in QuickBooks, you can set up a rule. And what a rule does is every time you do a bank fee and you have an expense come in, I mean, you have a transaction come in that's from Ameren UE, it's going to automatically send it to utilities. Every time you have an expense come in that's from, excuse me, let's say Ronald Leggett, it's going to automatically categorize it to city taxes. So you can set up the rules and take it as far back as you want to, and that will make it a little bit easier for you. Did that answer your question, Paula?
I got one more question.
Yes. Okay.
Christina
Okay.
said, if you need to use a spreadsheet because your business is very new, do you recommend a spreadsheet program until you can afford QuickBooks?
So Wave is a free accounting software. I never recommend a spreadsheet. Um, Wave is a free accounting software. And with Wave, you can send invoices. You can also record when that invoice has been paid and how they paid it. And that will give you the tracking that you need. I never suggest a spreadsheet. I just don't use, like I said, Wave is a free accounting software, and there's another one, but I can't think of the name. QuickBooks you can do for as little as I think $7 a month. They bill monthly, but they bill annually, but there's also an option to have it billed monthly. Are there any other questions, Addie?
This one is from Carolyn. Where and how do you show or get back the money used to start the business?
So if I understand your question correctly, you're asking the money that you use to start the business, how do you get that back? So
Correct.
there are a couple of things that you can do. One thing that you can do is give the business a loan and set up a notes payable. So then the business pays you back so much each month. So you can do that. You can record it as owner's contribution. And so you won't necessarily get the money back as in the form of getting a check. But when you file your taxes, that owner's contribution is going to come off of your earned income, if that makes sense. So if you're a sole proprietor or single member LLC, when you file your taxes, you're going to do a Schedule C. And that Schedule C is going to ask all those questions and take all of that information and then give you a number to deduct from your total income to help with to deduct, and it's going to change your adjusted gross income. Are there any other questions? Okay. So this slide is, though we've talked about QuickBooks and Xero, this slide just kind of talks about it a little bit more. So QuickBooks and Xero simplify tracking your income and expenses automatically, ensuring accuracy and efficiency, and they automate bank feeds. So you can actually set up for it to pull your bank feed you can set up to pull your bank feed every morning at 9 o'clock. So every morning at 9 o'clock, whatever transactions you've made up until that day, then that's what's going to show. You can set it to do once a week. You can set it to do once a month. If you have a day set where you're doing your accounting once a month, then you have your bank feed set up to do it that way. Although I wouldn't advise it if you have a lot of transactions. And so what happens with the bank feed is you log in through QuickBooks. You're going to log into your bank account. It's going to verify your identity, have you connected, then it's going to pull in all of your transactions. Once you set the rules up, it's going to then categorize those items for you automatically. And so when you log into QuickBooks, it will say 20 items imported, 5 items need your attention. So those are the 5 that don't have a rule set up for them. Okay. And so you take those 5 and you categorize them however they need to go. I'm not sure if Wave has that capability. The other thing that you can do with QuickBooks and Xero is you can download, like if, for whatever reason, your bank account does not have, it's not able to connect to QuickBooks, or you have a credit card that's not able to connect to QuickBooks. What you do is you download what's called a CSV, which is basically an Excel spreadsheet. You can download that from your credit card and then upload it to QuickBooks, and it'll automatically put those transactions in. So when you set up a bank feed, you're not just setting up your regular bank account, you're also setting up your credit card. If you use Square in your business, you can set Square up with the bank feed. So any merchant that you're using to send and receive money, you can set it up in your bank feed. QuickBooks and Xero both have the ability to invoice easily, and so does Wave, which is the free one. There's an app, so you can download the app. You can create an invoice from your phone. I create lots of invoices from my phone for my other business. Like when I'm doing consulting and somebody calls like, hey, I need this, or can you do this? I can, if I'm somewhere away from my computer, I can set up the invoice in my phone, and it has my logo on it. All my business information is already in the app on my phone. So when I send the invoice, it doesn't look like it came from my phone. It's just an invoice that came from Let's Talk Business LLC. And then the comprehensive reporting. So in addition to the regular financial statements, there are so many other statements that you can use, so much other information, excuse me, that you can get from QuickBooks, from Xero. One of them is the budget to actual. I really, really like the budget to actual report, because what that says is, you create a budget for your business every year. All big businesses, they have a budget. A lot of them, their budget doesn't come out to the middle of the year. A lot of schools' budget doesn't come out to July 1st. But whenever you have your budget, you put your budget into QuickBooks. Halfway through the year, you want to see how you are, what you're doing, right? Like what your financial position look like. Like you see your financial statements, your P&L, your balance sheet, you see what they say, but you want to see how they compare to your actual budget. So you can run a budget to actual report, and that report will show you marketing expenses budgeted 500, you spent 200. So that means you still have 300 left to go for the rest of the year. Budget to actual report may show that you spent $5,000 in bank fees when you had budgeted $3,000. So now you need to figure out where that other $2,000 went. What caused the rise? Did you not plan properly? So a budget to action report really gives you the ability to look at where you are, where you're trying to go, and to figure out if there's something different you need to do or if you need to make an adjustment. Are there any questions over the QuickBooks and Xero part? No?
Nope, I do not
No
see
questions,
any.
Addie?
No, I don't see any.
Okay. Okay, great. So examples of, oh, wrong way. Examples of record keeping. Income tracking. So a small bakery logging daily sales into QuickBooks. So at the end of the day, they log how much they sold. Now, bakery, because they have so many different types of donuts and scones and bear claws, they may not separate each donut. Now, they might log donut sales, bear claw sales, and croissants, like those as separate revenue streams, but they probably will not log glazed donuts, chocolate donuts, blueberry donuts, cake donuts, Long Johns. They're not going to log all of that separately. It would take entirely too long. But they will do the donuts, the bear claws, the scones, the croissants as a way to keep track of what they've done. So that as far as their income tracking. Expense tracking. Maybe a freelancer categorizing software and travel expenses into Xero. So they have, oh, let me figure out, I have some things I need to do. I'm going to an event. So like a freelance photographer, right? You have people like that. And so they may take pictures. So they may, let's say what's coming up. Maybe the marathon, right? There's a marathon coming up in Boston, the Boston Marathon. And they just want to be able to get that one really good shot that they can sell for $50,000. So they'll take them, a couple $100 to get there, a couple $100 for a hotel. So they're recording all of those expenses, but they're also recording how they had to get there, their train ride to the location, if they had to pay to get in. So they're going to record all of that, but it still all falls under, they're going to record their traveling expenses because that's an expense. Then you have internal controls. Your retail store doing a bank reconciliation weekly. That they do that so that there's not as much to do at the end of the month. So this is just an example of the three main things that we've talked about: the income tracking, the expense tracking, internal controls, all which are part of record keeping. Something that we did not cover that I would be remiss if I didn't is when you hire someone to do work for you, hire a contractor, the amount, like if you're just paying them $50 or $75, you can just record it, you know what I'm saying? But the minute you pay someone, over $599, you have to get a W-9 from them. And a W-9 basically is the name of their business, their tax ID number, because you have to record that you've paid that money to them, right? And they're going to get a 1099 at the end of the year. Most companies, because they've given you an invoice, like most major companies, that's different. What I'm speaking of more so is if you have someone that comes in to, maybe you own a daycare center and you're having someone to come in and do training to your classroom teachers, right? They come in, they're doing training. If you pay them over $600, what you're going to ask for before you even pay them is a completed W-9. You're then going to scan and save it, scan and record it, and attach it to either the contract that you had with them or the transaction, the first transaction of you paying them. But that's also an important part of record keeping. It's making sure that you have a W-9 or that you have I-9 information um, filled out for any workers that you hire, any W-2s that you collect, you keep them. One of the biggest things is keeping the documents. The IRS can go back 10 years, right? Which is another reason why I said I prefer cloud storage over physical storage. Because imagine somebody like McDonald's keeping paper records. Like they would run out of space, right? Especially if they're really busy. So those are the things that you have to think about when you're thinking about record keeping and where to keep the records. You're keeping contracts, you're keeping receipts, um, you're keeping anything that might possibly be deemed important. You're keeping emails that speak to a transaction or a change in a transaction. You're keeping credit memos, debit memos. You're keeping all of those. When you get your financial, your bank statement. So if you have a credit card, when you get your credit card statement, you're recording it. If you do digital credit card or digital banking, that's fine. But you need to download that bank statement at the end of every month. Because even though it's online, most banks only store them online for so long. So then if you come back, let's say we're in 2025, the IRS hits you with an audit or a question about a transaction in 2022, where you're not going to be able to go back to your bank online to pull that down. You're going to have to call the bank, ask them about the transaction. Then they're going to charge you to get it when you can just download the information when it's available and save it on the cloud and just keep it. You can have a folder that says Bank of America bank statements, Commerce Bank bank statements. Inside that bank statement folder, then you have January 22, February 22, January 23, January 25. You just have them separate folders and you can put those bank statements in there. Or 2024 and put all of them, put the whole month in there. But whichever works best for you, you know your best style of researching or finding information and what works for you. Are there any questions before I move on?
I have one question. Angelina said, what type of record keeping for a press-on nail business?
So for press, naturally your income and your expenses, how much money you make, how much money you're spending. Because for a press-on nail business, I would imagine you have to pay for molds, you have to pay for the colors, you have to pay for the samples if someone is making them for you. You have to pay for samples. You have to pay for packaging. You have to pay for shipping. So all of those is the same thing, just recording your income and your expenses.
And she asked, are you supposed to separate the inventory for personal use and business use?
Absolutely. So if you are using it for personal, so there's a caveat to that. Within reason, you can use them if you're going to an event. So let's say there's an event for, I don't know, a networking event for entrepreneurs in the beauty industry. And you want to put on like your newest pair of nails. That then, whatever that price is, that cost, whatever you sell them for, if you sell them for $30 a box, for you to use them for that, you're going to charge that $30 as a marketing expense. Now, if you're just wearing them every day, then you just need to pay for them. Like that's how you record that. So you can sell them, you can pay for them at cost because it's you, but you need to record it and you need to pull them out of inventory as on a withdrawal.
That's all the questions.
Any other questions? Okay.
Yeah.
So Tyler, were people mailed the handout booklet? Or emailed rather?
So the library has all of the handouts, and I don't know, I think they're sending a follow-up email or something, but that would be a question for them at the end. I'm sure they'll let the participants know how they can get the information.
Okay. Um, okay, so I probably should have asked that ahead of time because let me see if I can pull them up on my screen. Um, I wasn't sure whether or not they would actually have it.
Yep, it
No.
looks like they'll receive it at the end of the session, the information.
Okay. Okay. So let me try and pull it up. My stuff is moving so slow. Give me 2 seconds. I'm trying to find my own copy so I can pull it up and share. Give me 1 second. People, I do apologize for the inconvenience. I want to um, pull up some items that I had created for you all to have and to share, just to see like some internal controls and a couple other things and how you will record them. Okay, now let's see. Trying to get back to sharing my screen. It's not cooperating. Hold on. Yeah. Okay, can you all see my screen? Are you able to see my screen, Eddie?
No.
It looks like it's buffering, but it may pop up in a second.
How about? Okay. So what I'm waiting to show is a couple of checklists that I created for you all, and they'll send them to you after the presentation. So one is a monthly accounting checklist. So these are the things that you should do once a month. Now, I know the month technically ends on the 30th, but that doesn't necessarily have to be when you do the checklist. Like in the corporate world, in the accounting world, the month ends on the 30th. So you can't do the accounting for the month by the end of the day on the 30th because the month just ended, right? So typically, the month ends on the 30th. Usually your financial statements and all of your accounting for the previous month is due on the 15th of the current month. So like the 15th of October, you should have all of your September journal entries and stuff completed. You might have to make an adjusting entry or whatever. So this checklist, I recommend just picking a date and setting an alarm on your calendar and blocking out that time or, whatever time you think you need. But for a monthly accounting checklist, record all income and expenses for the month, all bank and credit card accounts. And that also means your bank expenses. So, for example, when you somebody purchases something from you and they're using Square or they're using any credit card company and you have to pay that 3%. That 3% is a bank fee, okay? But which is an expense. But what you should not be doing is charging people more money if they're paying with a credit card and then recording that bank fee as an expense, right? Because one, you didn't really have that bank fee because you charged the person more to cover it. That's number one. Number two, I always share this with people just if you just do regular, just basic math, right? So if you have $1 million in sales every year, or let's say $1,000. If you have $1,000 in sales every year or every month, but you charge people an extra $3, right, for that purchase. So now I'll just say, your stuff costs $10 or whatever it is. Every transaction that you charge the person $3, you now have additional income. So now you have more that you have to pay taxes on, right? So that's not necessarily a win. If you're selling bottles of water for $1, but because they're using a credit card, you charge them $1.30. So when you sell 10 bottles of water, you now actually have $13, right? That you got to pay taxes on as opposed to the $10. And you can subtract the bank fees, but the bank fees are separate than the taxes that you have to pay. So you're paying more taxes, right? Because you want to cover the bank fees. That's not how you do it. What you do is when you get your statement every month for whatever, when you get your statement from Square, from QuickBooks, from whatever you use for merchant services, it's going to tell you how much they charge you in bank fees that month. It's just like when you're doing a reconciliation for your regular checking account. You're going to record your bank fees for the month the exact same way. Review your profit and loss and balance sheet reports. Look at them. Make sure the numbers look right. Sometimes you might get to keying too fast and you add an extra zero. So you might see an expense that's $12,000 instead of $1,200. So it's just good to always review it. Pay attention to your cash flow and think about any upcoming expenses you might have to make sure that you have money where it needs to be and everything that it needs to be. How are we on time? I know we started a little late, but it's 4:50. So how are we on time?
Probably about 5 more minutes, maybe a little more.
Okay. Um, so then you have your quarterly checklist. The same, it's not the exact same as the monthly, but it's similar. And you might want to quarterly, if you have a small business and you're not doing a lot of work, maybe quarterly or semi-annually, you want a bookkeeper, somebody to review your records to make sure everything looks good. That's where you're going to check your review and adjust your budgets. And I talked about when you put your budget into QuickBooks, having a time where you actually review the budget to see where you are. I also included a year-end checklist. Of course, that list is going to be a little more extensive because you have to get ready to file your taxes, and you want to make sure that you have everything in place to file your taxes. I'm going to. This is just like a blank way to do your inventory. So the person that asked about spreadsheets, I would do something like this until you got software. So you have the month, the total amount that you took in, the total amount you spent, and what your profit was. But definitely look into Waves, like I said, because it's free. So you should be able to Waves is a GPS app. Wave, WAVE, like the Vanna Wave. And then I'm trying to get to the internal controls checklist. So you'll also have this, because I just gave like very generic things, but I just want you to think about, like the cash handling, separate duties for receiving, cashier collects cash, bookkeeper records deposits, maintaining the petty cash from receipts, $200 petty cash reconciled monthly. So you continue to reconcile it. Let's see. You'll have the list, but I just kind of wanted to go over it. Technology and data security, really, really important. Make sure you're updating your passwords regularly. Make sure your employees or anybody that works for you, if they have access to your system, you want to make sure that they have a set amount of time to update their passwords. I'm going to stop now so that if anybody has any other questions, we have a couple of minutes left. And then
Misty has a couple of
I can
questions.
take any questions.
Misty had
Okay, go
a
ahead.
couple of questions. Can you share a better expense tracker for landlords?
Landlords.
Yes.
So an expense tracker, excuse me, for landlords. So there are a couple of different softwares that are out there for landlords because I also have rental property. But some of them like kind of cost. If what I would say is you can use QuickBooks, and when you go into QuickBooks to set it up, it's going to ask your industry. So it's going to ask what you're doing. So your industry it be real estate, and then it's going to break it down, and you can say rental property, and then it's going to populate a chart of accounts based on what a typical landlord would need.
I have another question. If a person never did accounting on their business before, where do you start?
Oh, so one, it depends on how many years you've been in business. How many years have you been in business? The person that asked that question.
5 years.
Oh, you've never done. Okay. So in that instance, I would recommend you pay a professional. Because you also need to either file an amended return. If you filed regular returns, just not your business return, you're going to need to file an amended return. So I would suggest you hire a professional because they're going to need to go into QuickBooks and kind of go back, like dig, in order to find that information. And so I would definitely recommend that you hire a professional. That's not something that I would tackle on my own. Like I'm an accountant. I have a degree. I've done forensic accounting, all of that. I if I well I if I had a business and I just had taken the time to do it, I would take it to someone else. Because what you're going to need to do is look at the expenses that you have. You're going to need to look at how those expenses, how you, if you calculated, if you captured any of it when you did your tax return previously, when you did your regular personal tax return. So it's going to be some questions and things that might be asked. So I would definitely hire a professional. I wouldn't try to do it myself if you don't know anything about accounting.
Another question, how does QB compare to Wave?
So, in all honesty, I'm going to say I would definitely prefer QuickBooks to Wave. In my opinion, it's one of those situations where you get what you pay for. So there are so many programs and apps that interface with QuickBooks. And so it makes it easier. So yes, Wave is cheaper. Now, if you're just starting out, you only have 5 or 6 transactions a month, by all means use Wave. But if you have a lot of transactions and you're doing a lot of work and a lot of volume, a lot of expenses, then I recommend getting QuickBooks. If, like I said, you're new, use Wave. It's just going to require more work on the back end, right? Whenever you get ready to transition to something else when your business picks up. So, QuickBooks, like I said, they interface with a lot of software. So if you use Mileage IQ to record your mileage, QuickBooks, you can just upgrade. You can download a CSV from Mileage IQ and upload it to QuickBooks, and it's going to record your mileage for you. But there's nothing that says you can't just record your own mileage in Wave. And in Wave, when you start to do different things and add different components, then you have to start paying.
Thank you, LaVoice. This is the
Any other
last
questions, Addie?
question. This is the last question.
Okay. Oh, that was the last question?
Yes.
Okay. Awesome. Well, I thank you all for having me. I thank you all for joining us. Um, and I hope you learned something today. I hope you had something that you could take away with you. And they will be sending out follow up, um, a little workbook that I created with the stuff that I showed last with the different charts and checklists for you to use in your business.
Right. I'm going to conclude real quick. Thank you, LaVoice, for sharing your time and expertise with us today. I have added the link for the feedback in the chat. Again, you'll have another opportunity to share your thoughts when you receive the follow-up email. Thank you so much. Goodbye, everybody.
Thank you. Bye bye.
Bye.